Hi everyone, and thank you for tuning in to our monthly economic update for the month of April for the year 2024 here on Economy.lk. The month of April has been a little bit slower than the month of March, but the big news we have is the government of Sri Lanka and the bondholders, the discussion they had on the ISB proposals. So for more information, you can log into Economy.lk and find more information where the Economics Intelligence Unit has written an article on this. But just to give you a brief idea, there was a March proposal sent across by the bondholders, and the Sri Lankan government sent across a counter proposal. Now, the difference here is that the March proposal sent by the bondholders looked at one particular variable, which is the nominal GDP in US dollar terms for Sri Lanka. And in the Sri Lankan counter proposal, we consider that variable alongside another variable, which is the real GDP growth rate. And taking these things into account, the bondholders proposed another proposal in the month of April, which the IMF team is yet to look into, and they need to check whether this proposal fits into the debt sustainability analysis as well, with the target set for the Sri Lankan government. And there was also a mentioning of, in addition to the macro-linked bonds, which was mentioned in these proposals, there was another mentioning about governance-linked bonds, linking these bonds to certain governance-related targets set by the IMF in their governance diagnostic report late last year. Looking at two aspects. One quantitative target, for example, is the tax revenue to GDP. A qualitative target is, for example, publishing procurement, which is more than 1 billion rupees. So more information you can find, as I mentioned before, on Economy.lk. Moving on, it was mentioned by the State Minister of Finance that for the first quarter of 2024, tax revenue targets have actually exceeded the estimated target by 6%. So if you look at this particular graph you're showing here on screen, all three agencies have registered a revenue of 834 billion rupees for the first quarter of 2024, where inland revenue has contributed 430 billion, which looks at 113% more than the given target to them, and customs has recorded 353 billion, whereas excise has recorded 51 billion. So in terms of tax revenue, the government seems to be on course. In terms of the Purchasing Managers Index, again we see good indicators here. For the PMI services, we see 67.7 and PMI manufacturing at 62.5. where the index value, if it's more than 50, it's indicating or implying that the particular sector is expanding. And moving on from that, the NCPI, National Consumer Price Index, which is the national level inflation index, the numbers were released a few days back. And what it says is month on month, there's a decrease by 2.1%. However, year on year, there's an increase by 2.5%. Why this is mainly because of the base effect. For example, if you take NCPI for the month of March in 2023, it would be somewhere around 200. Whereas for the month of March in 2024, it was somewhere around 210. So there's a slight increase. But if you consider month of February in 2024, the index was at around 214, which reduced to 210 when it came to the month of March. So month on month, there's a decrease in NCPI. Moving on from inflation, we saw that the policy rates were cut by 50 basis points in the month of March, and it's kept as it is for the month of April. And with this, market rates are coming down, especially AWPR, which is at 10.41%. Moving on from the monetary side to the external side, I thought of highlighting this interesting graph where if you look at the red line here, the red line emphasizes this particular sector, ICT BPM sector, and the number of exports we have done. Now, if you compare all the other export sectors with the IT BPM sector, you see that there's a gradual improvement in the IT BPM sector, whereas in other sectors it's either stagnant or there's a small dip. So these are time series from 2014 to 2023. Why I highlighted this is for a particular reason. The Sri Lankan government came out with the National Digital Economy Strategy, as you can see here on the slide. This is a very important piece of paper, and all of you all can provide your inputs for this strategy as well. And why this is important is this particular slide. Now, if you look at this graph, the digitally delivered services globally from 2005 to 2023 has increased by more than 300%. And where does this come from? And this is what this slide looks into. It comes from computer services, financial services, and other intellectual property services. And if you look at Sri Lanka, where does Sri Lanka stand in terms of digitally delivered service exports? Sri Lanka is at around $1.1 billion, the market size. And we have been quite stagnant since the year 2016. So there's a lot of potential for digitally delivered services exports for Sri Lanka. And if you look at this particular graph, it's very interesting how India has outperformed and grown more than twofold compared to Sri Lanka. Now, moving away from the domestic market to the global market, IMF came out with the World Economic Outlook report, and they suggest that for the year 2024, global growth is at around 3.2%, and it's going to be the same for 2025 as well. For emerging markets and developing economies, it's going to be around 4.2% in 2024 and 2025. ADB and World Bank focused on Sri Lanka. IMF did not focus on Sri Lanka for the month of for this particular quarter because Sri Lanka is going through an IMF program. ADB and World Bank's reports suggest that Sri Lanka ranked among the 2 countries with the slowest economic growth. And if you look at this particular graph, it suggests the growth rate for Sri Lanka and inflation targets or estimates by World Bank and ADB. What it says is growth rate would be around 1.9% in 2024 and 2.5% in 2025 according to ADB. And according to World Bank, in 2024, the growth rate would be around 2.2% for 2024 and 2.5% in 2025. So that's a little bit about the domestic market and the global market. Thank you for tuning in, and we look forward to seeing you in the next monthly economic update for the month of May. Thank you very much.